So I guess, Dan, if you want to kick it off, this is with Alex
Sure.
Temiz, head moderator, or one of the leading moderators at MIC. I'm in the room. I've had success in the room. But this webinar is all about strategies revealed, how to profit during the bear market of 2022.
Awesome. Great intro, Steve. Guys, thank you all for joining us today. We've been doing these webinar series, really trying to bring some content and value to our subscribers, our account holders, anyone who's following our story. I couldn't be more excited today to be bringing on and talking to Alex Temiz. He's become a friend at this point over the years, just kind of traveling in similar circles. We had the opportunity to hang out on a couple of occasions, and I'm really interested to hear some of what the secret sauce is behind all of the profitability, and more importantly, the consistency. Alex, from what I know of him, he's been doing this for quite some time. Consistent. I mean, the man is tweeting every morning at 5 o'clock in the morning. I think that may be part of this, one of the secrets to his success. But I'm really interested and excited to kind of get into the weeds with him and hopefully uncover some of the things that may not be readily apparent to folks, and maybe coming up with some of the methodology behind the madness of his profitable trading and the MIC method. So Alex, really, thank you for taking the time, and welcome to the webinar, brother. As we kind of try and dive into the MIC method and what's helped Alex sort of get to where he is today. So Alex, again, thank you for joining, and really looking to get into get into it with you. So
Good.
before we get into like some of the trading specific stuff, if you could give our folks a little bit of background, who you are, where you've come from, how long you've been trading, that type of stuff. What got you into trading?
Sure. So my name is Alex, 28 years old, been trading for 8.5 years, started trading at 19, was a barista at Starbucks making coffee, was making about $150 a week working at Starbucks. At the time, gas was very expensive, so I was paying maybe like $60, $70 to fill up my tank, and the remaining $50 was used to maybe take my girlfriend out to the movies, and then if I was lucky, I had maybe $20 left at the end of every single week to put into the bank account, right? So I didn't really have much money, but the reason why I got into trading is pretty funny. Is my girlfriend broke up with me, and I wanted to just make a lot of money to kind of get back at her, and that's where it all started. So while I was a barista at Starbucks, I started researching, how to make money fast. And what I ended up finding is the two fastest ways to make money in America are real estate and the stock market. Real estate is a large barrier to entry. You need a pretty decent amount of money to start. But with day trading, you could open up an account with as little as $500. So I have $500, right? Just a couple of weeks of working, I can make $500, and I'm not with my girl anymore. I don't have to spend money on gas. So that's kind of where the journey started. And when I first started trading, I had a very magical talent of every single stock that I touch cratered, every single one. And I just buy the top every single time. I have no idea what happened. That was my gift. I had a reverse Midas touch, right? And what ended up happening is after probably about a year of just buying stocks and losing money, because I was taught the wrong things. Back then, there was not really much education out there outside of YouTube, and back then, being 19 years old and being very inexperienced or uneducated, I didn't really know what would work. So I thought that buying the breakouts was the simplest way to make money. I learned that buying breakouts don't work, and it took me a very long time to realize that. Fast forward my second year of trading, I learned what shorting was, and I said to myself, if every time I touch a stock and it craters, if I short it, I'm gonna be rich, right? And then I ended up, I remember my first trade, I ended up shorting 2,000 shares of a stock. It dropped 50 cents a share. I made $1,000. That was the most money I ever made at that point, and my life changed since then. Then I started shorting everything, and I started to realize that I can't just short stocks just because they're up. And by my third year trading, I started to finally have a strategy, have a process, and start to make money. So it took me about over 3 years to really start to make money. So, I mean, I don't think I would.
And those first 2 years, Alex, were you still working at Starbucks? Were you still doing other things to kind of supplement your income?
I was definitely still working. I was definitely still working because I just needed the money, to be honest. I needed the money, and I needed to be able to reload my account because I was not making money at that time, right? So I pretty much went from, not knowing about how to make money to finding this business that, making, $1,000 in one day on my first short trade. I was hooked, right? I was hooked, and I just
Right.
wanted to get better. And that's where I guess the passion and the addiction started.
Right. And how far into the process would you say did that first big win occur?
That honestly, I think it might have just been luck, because I opened up an account, and I found the stock that was running. It was running, and I think it was running on some sort of chat room pump or some sort of artificial news or some sort of some BS it was running on. And I said to myself, okay, normally I would buy the breakout at $4, and that'd be the trade. And I said, you know what? Instead, this time of buying the breakout at $4, I'm going to short the breakout at $4. I guess literally 5 seconds later, the guru, the chat room must have sold it. Stock went from $4 to $3.50. I made 50 cents a share on 2,000 shares, made $1,000, and that was it.
And do you think, had that not occurred, we would be talking here today right now?
I have no idea. I really don't. I mean, the world has a mysterious way of working, and that I still remember the ticker. It's VGGL. It does not trade anymore. It's like delisted, gray sheets or some, I don't know, whatever the hell happened to it. But when I made, because I was looking, I had it on my phone. I didn't even have a trading computer at that point. I was using my phone to trade, right? And I was looking at it, I said plus 1,000, and I was like, holy shit! Like, I just couldn't believe that was the most amount of money I've ever seen, and that would take me 2.5 months to make working my day job, right? And all of a sudden I made it in a few minutes, and at that point, literally, it was like I became addicted.
Right. It's funny because in talking to gurus like yourself, everyone has a little bit of a different story, but there was always that one thing that kind of kept them going, if you will. It's like, when you first started for golf and you hit a good golf shot, it's like you can hit 100 shitty shots, but the one good one is like the one that keeps you coming back.
Yeah.
And I'm just curious if that wouldn't have happened, would you have been able to just keep muddling through and keep trying to figure it out if you weren't seeing like any of the rewards, especially
Yeah.
early on?
Yeah, I mean, it wasn't shortly after that I lost that $1,000 on some other
Right.
garbage that I tried. So what I
But you knew it was
realized,
possible.
exactly, I
Yeah.
also realized I didn't know it at that time because I was still a kid, 19, 20 years old. It's you think you're an adult at that age, but you still don't know
Right.
anything. At that age, I didn't realize how passionate I was, because at every waking moment, at every second, I would just scour YouTube, scour the internet to just get better at day trading. And I watched that because to me, it was not only entertaining to learn about this stuff, it was also the more work that I put in, maybe the better I'll get. So I was actually very passionate about the art of day trading, the industry of trading, I thought that the only way you make money in the stock market is you buy a stock, you hold it for 30 years, and then you become rich.
Right.
I didn't know that you could trade in and out of stocks in 5, 10 seconds, 5, 10 minutes, right? So that idea of, learning something, I just loved it. I just loved trading because I love the Wall Street movies. I love the nice cars, the suits, the this, the that. And because I was passionate about those things, it helped push me to learn to be able to one day be able to get those things.
And would you, just in that last sentence that you stated, would you say that that is like the thing that separates you from someone else who's not as successful, or who've, maybe been at it for some time that's just not quite figuring it out? Is there something that you've seen some commonality in? Like, you're in the chat room with lots of people, and you've seen a lot of success stories, you've seen a lot of people fall flat. Is there something that you can tap into that's sort of some common element of a person's makeup, their work ethic, what that you've seen has been like one of the ingredients to success?
Yeah, for me, what I think separated me from the start is I treated this as a business. I didn't treat it as gambling. So when I first started trading, I wasn't the guy that said, all right, I'm going to put 5 grand in some penny stock and I'm going to be rich, or I'm just going to buy this stock because I think that it's going to go to the moon or whatever it is. For me, I treat it as a business. I want to be able to do my research. I want to be able to, what is the news? Why is this even running? Is this running on no news? And why should I buy a stock that's running on no news? I'm not going to buy a stock that's running on no news. It needs a catalyst. So from day one, I always treated trading as a business. I treated it seriously. I didn't want to gamble because, there has to be an edge, right? My thought process was, if these big banks like Goldman Sachs, like Morgan Stanley, like JP Morgan are making money, there's got to be a way. There's got to be a way to make money. So if they're treating it professionally, why don't I treat it professionally? They're not gambling, so why should I be gambling? So I took it as a way to say, you know what? I'm just going to take this seriously and I'm going to treat it as a business. There was a point where I said, you know what? If I would make money, I would go get a steak. If I would lose money, I would have to eat like a salad, something I hated, or some I can't leave the house for the day, or some sort of reward and punishment. Because in
Right.
the real world, if you are working and you're working for your boss and you screw up a project, he's not going to give you a promotion. He's going to give you a punishment. So in the same thing in the market, if I deviated, if I did something wrong, I would have to punish myself. Whereas if I did something right, I would reward myself with a steak, a cake, an ice cream, a cookie, something like that,
The last 3 webinars, interviews that we've done has been some gentlemen on the floor, Peter Tuchman, David Green. They've been Einstein of Wall Street, been down there forever. Tim Sykes was the last one. You now, all 3 of you guys have harped on, this is a business, and we treat it as such, right? So that's an amazing point, and not just Alex saying and seeing that he's seeing that with sort of the makeups of people who've been successful, but we're hearing it too from other experts that we talk to all the time. It's definitely a common theme, and lately it seems to be the one that people kind of bring to the forefront most, is because, interesting statistic. They say all new restaurants, 90% of them fail. Well, I mean, it's akin to trading, right? If people don't treat it seriously like a business, the odds are definitely stacked against you. There's no question. So I think that serious treatment is definitely something that you successful folks have in common.
And the thing is, like, you have to just be thinking, like, the market is a game of who is on the other side of the trade, right? So the stocks that we trade are mostly these scam stocks, anywhere between $1 to $10. They're being hyped up, they're being pumped up, they have no real reason to go up. If I'm shorting those stocks, I want to make sure that the guy that's buying those stocks is as uneducated as possible. I want to make sure he's gambling. I want to make sure that he's some rich doctor that has a spare $1 million in his pocket and he's putting that $1 million into XYZ stock, because for him, $1 million is nothing. But if I could take a little piece of his money by taking the other side of his uneducated trade, that to me is an edge, right?
Agreed. Yeah, great point. Great point. So in terms of, let's pivot a little bit to My Investing Club and what you guys do.
Sure.
Can you talk a little bit about your guys' methodology as the My Investing Club sort of edge, and what you guys teach to your students? Obviously, not getting into super deep into the education, but if there are some high-level points that you want to touch on to kind of illustrate your guys' process, I think it'd be helpful.
Sure. So there's 2 things that go into it, right? So you mentioned the word process, and process I feel like is a very fancy word that people just kind of, they throw around. They don't really know what it means. So for us, when we say process, it means a routine that you could show up, that you could repeat every single day to pull out money in the market. That is what a process is in my eyes. So for me, what my process, I'll walk you through it, because that's step 1. Then step 2 is going to be risk management. So step 1 is the process. So what I do is I wake up in the morning. I usually wake up around 5 to 6 a.m. And what my process is, I check what are the highest percentage gainers on the day, because the highest percentage gainers on the day usually are the stocks that are going to have the most action. After I check the highest percentage gainers on the day, I look at the news. Why are they running? Is it up on no news? Is it up on a contract? Is it up on FDA? Is it up on vaccine? Is it what is the news, right? After I decide for the news, the next thing to do is look at the chart. The last time this stock got volume, the last time this stock ran, did it have multiple days in a row of running, or did it just go up and straight down? If it went up and straight down, that's something I'm interested in as a short bias trader. After that, you could look into the filings, you could check their numbers, you could do stuff like that. And then that right there of just being able to do that part is probably about 60% of the equation. The remaining 40%, whether it be emotions, whether it be technical analysis, whether it be whatever, that main area of me finding a criteria of stocks, also the price range of a stock matters. I found that I'm not good with stocks under $1. I found that I'm not good with stocks over $10. So my sweet spot is $2 to like $9 is my sweet spot. So yeah.
Is that a sort of an MIC thing, or is that your personal adaptation to what it is you guys teach?
Yeah, I mean, what we like to focus on is the scam stocks, and most of the time, the stocks under $10 are usually the scam stocks. So that's kind of where our edge lies. Whereas, something that's $10, $15, $20, maybe institutional money might come in, maybe more people get in, because I think the rule is, I think over $5 a share that these institutions can't get involved. I don't know the logistics.
Yeah, the mutual funds or something like that.
Something like that. So that's I imagine now the mutual funds can't play. It's just a bunch of garbage men and mailmen and I don't know what are UPS drivers that are buying these stocks, and I want them to just keep buying and buying and buying because they don't know what they're buying. Like even I have like some friends that are in like a stock trading group chat, and they like buy these random penny stocks, and they're like, oh, I'm just gonna let it run. Like I'm up 20%. I'm just gonna see how far it goes. Let it just keep doing its thing. They check back a week later, they're plus 20%, it's minus 50%. They don't understand that
and it's never coming back.
They don't never like Apple, Google, Netflix, whatever it may be,
Yeah, yeah. So now that I'm saying it, we're in a bear market. We've had a couple of quarters of negative growth. It's what's happening. Is there anything different about the process, the strategy, now that things aren't rapid firing, accelerated on an upward trajectory?
Yeah, 100%. So the main thing that I've been telling a lot of people is, what worked in 2020, what worked in 2021 does not work in 2022. So using the same strategies that maybe made you millions of dollars in the last couple of years, trying to use those same strategies in a different market cycle will lead to you losing millions of dollars this year. So a big thing that's kind of helped me this year is just sizing down, right? Sizing down, being able to be a little bit more patient, not looking for home run trades, because as you saw, last year we had 10 home run trades a day. Now you're lucky if you get one every quarter, right? So trying to go in with that same home run mentality of, every day I'm going to size up, I'm going to bank. What ends up happening is you end up sizing up on the wrong stocks. You end up ballooning your losses, and there's no real opportunity to make that money back. So for me this year, from the beginning of the year, I've sized down. I've reduced my size by like 70%, and I've reserved my size for my best setups only. So if I don't have that ideal setup, I call it the bow at Disney World setup. Okay, so this is I talk about all the time. So
two of my favorite places and people. So that's awesome. I can't wait to hear it.
So the bet is this, right? So my bet is on if Bao is going to get drunk or not, okay? So there's two scenarios. If Bao goes to Disney World, there's maybe a 50% chance that he's going to get drunk. Okay, no problem. But if Bao is going to the club and there's a bottle of Hennessy and there's a couple cute Asian girls, there's a 100% chance that Bao is going to black out. So if I'm a betting man, I am going to bet heavier on Bao going to the club and blacking out, and bet less on Bao at Disney World blacking out. There is still a possibility that he's going to do it, but the edge is in my favor when he's at the club, because that criteria, that setup is a home run setup,
Awesome analogy. Love it.
Yes. I'm looking for those setups is what I'm looking for. And if those setups aren't there, I'm sizing down because the odds are not in my favor.
So in terms of the setups that you're saying, the 10 a day, the 1 a day, is that something that you could talk through with us now, or?
Yeah, I mean, so what's an example from, so let me give you an example. An example was from Bed Bath & Beyond a couple weeks ago. That's a stock that probably everyone recognizes, everyone remembers that stock. So a couple weeks ago, Bed Bath & Beyond stock went from like $5 to $30. Ryan Cohen came out and bought a stake in the company and started hyping it up, and the AMC apes, the memesters, they all started getting crazy on it. Stock went from 5 to 30. It ended up happening that Ryan Cohen ended up selling his position, and the stock went from like 30 to like, I don't remember, maybe 15 or 20. In the after hour session, it just collapsed, crashed, right? So to me, that was a signal. Also, the CFO sold his shares too. So Ryan Cohen, one of the top investors, and the CFO sold his shares. Stock was up on pretty much hype, you know, whether it be 300%, 400%, 500%, whatever percent it is. And when the pump ended, when the CFO sold, when Ryan Cohen sold, the stock cratered from 30 to 15. Now, a setup that I would like, a setup that's an A+ setup, a setup that's Bow at Disney World setup, is if that stock bounces, there's probably a lot of longs that are stuck on that stock. There's probably a lot of people that want to exit for a smaller loss because it just went from, 15 to, whether it bounces 17, 18, or 19. And to me, I want to be able to piggyback that trend and join that downtrend lower. So if that stock tanks, the downtrend begins, the catalyst is over, and has a dead cat bounce, I want to be the guy shorting that dead cat bounce, because then it's going to inevitably go down to like $8. And that was probably this year about a 6-figure trade.
Wow, nice, great.
Yeah. So I'm just trying to piggyback the weakness. I'm trying to piggyback the weakness on already broken stocks. What I don't like doing, what I've done in the past, is try to find the top on uptrending stocks. That I lost way too much money when I was doing that when I first started trading, but that is the road that you have to follow to learn not to do it ever again. So I've done it so many times where I've started to short the front side, I nibble in a little bit, and then I add a little bit, and then it gets way too big, and then I double down, and then after I double down, I'm in too deep, I gotta hold it, and then I get liquidated. The broker calls me, my girlfriend calls, my mom, you know what I'm saying?
Yeah, right.
You have to feel that pain to be able to never do it again. So now, instead of trying to find the top on uptrending stocks, I join the downside on downtrending stocks.
So what's your opinion on paper trading and its place in sort of education and learning? Because we're talking about pain. I mean, there's only so much you can cry about paper, but
Sure.
Talk to me about that.
Sure. I think paper trading is important, right? So one of my roommates, it took him long enough to realize how much money I'm making, so he wants to learn how to day trade. So I'm trying to help him learn how to trade. And he's been watching some of our videos, he's been learning some of our content. And what I've been trying to have him do is I've been having him paper trade for a little bit, just to see, get close to the platforms, the setups, the orders, the this and the that. And I think maybe as a new trader, you should be paper trading for at least a month. But then I think you should go in with live money, maybe use 10 shares max size, 50 shares max size, to be able to experience what it's like to lose real money. And you're gonna maybe lose $5, $10, $15 a day, call with 50 shares, whatever you decide to do. But that process of using real money will teach you more than that paper trading platform. So I do think that people should be paper trading for a month. After they do it for about a month, let them use their real money, but 10, 20 shares max size. They're going to bleed commissions, they're going to bleed locates, they're going to bleed this and that, but that's what's going to kind of help them understand how the market really works, because you don't understand until you have skin in the game,
Yeah, I wholeheartedly agree with you. And there's just a difference even in the way the execution works, right? In demo mode, everything's easy, it's fast. And many times in normal market conditions, you have a market order out and you're just waiting, and then the thing will turn and then you get filled. So there's just there are different mechanics going on behind the scenes when you're talking about the real markets versus the paper stuff.
Exactly.
Steve, as a fellow trader, any questions or
I just want to reiterate a lot of things that Alex has already said. So I joined MIC's room, I think it was about 5-6 months ago, and I made all of the same mistakes and had all the same problems that every other short seller has. You're trying to find the top, and you think finding the top is the only way to actually make money because you see other traders finding the top.
Yeah, right.
And I thought, when I first joined MIC, I thought what Alex was doing, I thought he was chasing. I thought there's no way you can be shorting these levels because it's already fell from the top.
Correct.
But what I've actually come to learn is it's kind of maybe it's not, and I don't want to give too much away, but it's about the point where longs are just totally effed. When the longs are totally effed, when it's gone past the level where everyone has to cut, that's actually the zone where you often would short. It's the safer place to short. And when I learned that, it's a case of just being patient. And that's when my trading really started turning around, when I started following these rules and processes. So in regards to paper trading, I think you almost have to lose by chasing the top too many times to learn. You have to go through the pain to learn. But like have a max loss in your account so you don't lose too much.
Yeah.
Correct.
So it's
That's
almost nice.
Yeah.
A different way. And, you know, equating it to Bal's partying, you don't want to start the party. You want to join the party that's already happening, right?
Correct. And that's the one thing, Stevie, you mentioned that I totally skipped over, that is the risk management part. So what we like to enforce to every single new trader, every single new member that joins, is have a max size at the broker level. So contact the broker and tell them that you want them to limit your size, and contact the broker and have a max loss auto liquidation, right? And the way that we set it up is, let's say you make $100 a day, your max loss liquidation should be no more than 2 days worth of work. So let's say you make $100 a day, call up your broker and say, my max loss auto liquidation, no matter what, is $200. That way, the worst case scenario, on the worst possible day, you only lose 2 days worth of work. It's very easy to make back. Whereas if you do not have that in place, all of a sudden you may lose a month or a year's worth of work in 1 day on one bad judgment call, on one deer in the headlights setup. And you know, all it takes is one time. And I'm sure, Dan, you see from the broker side, you know, it's whether it be long bias or short bias, it's just one lapse of judgment that could take you out.
Yeah.
It's happened
So
to
true.
me when I first started. And I wish I knew about hard stops and broker limits and auto liquidations when I started. It would save me hundreds of thousands of dollars in losses. So now, as a new trader, number one, no matter what, every single day, Steven, you see it, every single day we tell people, every single day, set a max size and max loss at the broker level. And the reason why we say it every day is because they don't listen until it's too late. And we're hoping that before it's too late, they listen to us. And that's kind of been what's also been saving me in this market, is having those limits to make sure that I don't blow myself up on a bad judgment call. On my girl fights with me that day, I'm extra pissed. Someone dings my rear ends my car, I'm extra pissed. I didn't sleep well last night, I'm extra pissed. I'm hungry, I'm extra pissed. Humans we're kind of fucked up beings, right? We're very emotional, fucked up beings. And in the market, you have to be as emotionless as possible, because that's how the algos are winning. The algos win because they're robots. They have no emotion. They don't care if they're hungry. They're always ready to go, right? So that's been a saving grace too. So I suggest, you know, for everyone watching this right now, if you don't have a max size, if you don't have a max loss, contact your broker, set that up, and you would be surprised, because just think about how many times you've told yourself, I'm going to stop out at $5. Goes to $5, I'm going to stop out. And then it says 6, 7, 8, 9, 10. You're like, God damn it, if I just stopped out at $5, I would have so much more money. It's happened to everyone. It's happened to everyone. So prevent that by putting those guardrails, by putting those limits in, to be able to allow you to protect yourself, you know?
And to Alex's point, we're obviously happy to help everyone who trades with us with that. You know, we can set that for you in a way where you can't override it yourself. Because that's another issue, right? You know, you can't just take it away and then give them the keys to put it back on, because then
exactly, it's like telling a recovering alcoholic, you know what, I'm going to take away the alcohol, but in case, you know, you get kind of
but here's
bored,
$100.
yeah, there's a refrigerator right there filled with alcohol. Just grab it if you want. You know, it has to be serious, right? It has to be serious. Would you fly out of an airplane without a parachute? Would you drive 150 miles an hour in a Ferrari without a seatbelt? You know, would you try to fight with your girl if she's not fed yet? You know what I'm saying? Like, there's a couple things that you got to make sure are ready and good before you.
You're gonna get yourself in trouble, Alex.
Hey, gosh, is not watching. But that's the thing.
just
There always has to be something to protect you, right? You need to have that seatbelt. You need to have that parachute. Even roads have guardrails. They have sandbags. They have something to protect you, God forbid, if something happens. So in trading, if you want to be a professional trader, you know, these hedge funds, these institutions, people that are trading with hundreds of millions of dollars have a dedicated person called a risk manager. His job is to make sure that you don't blow up your account, right? So as retail traders, where we don't have access to a risk manager, that's where we kind of go and lean on you, Dan, where we're like, all right, the broker is my risk manager. They are my partner in this. A broker wants to see a trader successful. A trader wants to be successful using their broker. It's a partnership between trader and broker. So let's help each other out with those tools to help when we lose control, you know?
Right. Great point and well said. And the analogies are awesome also, by the way. So in terms of for new, we get asked this all the time, right? Or we read this all the time. I'm new, I'm just starting. You know, is that the thing that you know, that is that the edge that new traders can latch onto, is setting those, you know, broker assisted stops, or is there some other edge that can be gleaned from, you know, I don't know, talk to me about edges to new and aspiring new traders.
Yeah, so you talk about analogies, I'll give you another one. So another thing is, let's say I want to get into a fitness journey. Let's say I want to lose a little bit of weight. Let's say I want to, I just want to get thinner, right? For whatever reason. So I could either go to the gym, you know, myself and try to figure it out and try to, you know, lift the weights and see what exercises work, maybe bench press, but my form is wrong, whatever. Or I could pay $50 and I could hire a personal trainer. So for me, I am the type of person that I want to get to the finish line as fast as possible. The fastest way to get to the finish line is to have someone that already has been to the finish line that could then help you. So for me, if I want to start my exercise journey, I'm not going to just do it by myself. I'm going to hire a personal trainer that's already massive, that already knows that this exercise works, this exercise doesn't. Don't waste your time with that. Eat this for your diet rather than me trying to figure it out. So our slogan is mentorship is the shortcut to success. So number one is find someone that is already successful in the industry you're looking for and try to learn from them. In addition to that, right? In addition to that, the more screen time that you put in, the more hours that you put in, the more successful you will be. For example, if you work out once a week, if you watch educational videos once a week, if you paper trade once a week, you will not get the same results as someone that works out 5 days a week, that paper trades 5 days a week, that watches 5 videos a week. You know what I'm saying?
So Alex, just real quick. So when you say watching video, right? So if I watch a video on what? Like on what? On
So we
charting
have, yeah, our
analysis.
videos are on strategy. So for example, like shorting into resistance, right? So how do you, what is the technical analysis involved in support and resistance? Do you know what technical analysis is? Do you know how to find your resistance levels? Do you know how to find your support levels? Okay, that's one video. How to read company.
Hold on right there. So you take that video, right? So shorting into strength, whatever. What are you then doing thereafter? Are you just watching the video and then looking for more, or are you then like hopping on your platform and looking for stuff? Like the process for the education of gleaning the information and then putting it into practice. Like talk to me about
So
that.
let's use that example of support and resistance and shorting into resistance. So let's say there was a stock moving today. I watched the video, market is closed. It's 4:30. I watched the video from 4:30 to 5 o'clock. At 5 o'clock, what I would do is I would open up my platform and I would just try to draw support and resistance lines on all the charts that were moving today. If I'm able to draw those resistance lines and see, wait a second, the stock was at $5 pre-market, and I drew a line of $5, and wait, when the market opened, it hit $5 and came down. Wait a second, that is the resistance, that is the ideal entry, and now that tells you, oh wait, the next time this happens, let me draw my resistance line and let me see if it's going to happen again. Next day comes along, oh shit, it happened again. The day after that, you say, all right, now I'm going to paper trade that setup. Let's see if it works. I do it again. And if it doesn't work, all right, hey, Alex, I traded the stock. I'm drawing my support resistance. Something's wrong here. Oh, that stock didn't conform because midday they had a PR. The catalyst changed. Something happened. It was non-natural. So it's getting that screen time in after you're able to apply that video will be what gets you to that level. It's like a doctor. A doctor could only read about so many surgeries and so many operations and so many procedures, but until he practices on a cadaver, until he practices on some guy, he's not going to know what it's really like to put that lesson into test,
I honestly, that little description that you gave, I got the most out of that, especially putting myself in the shoes of a new trader, because everybody hears, oh, study. Yeah, but okay, I can study, but like, then what? And how do I bridge the studying aspect into the doing aspect? And I think what you just said is a perfect explanation and process of how to do that.
Don't be discouraged, because I see a lot of people that, they want to start trading, they see the money that's in trades, incredible amount of money in trading, but they find themselves like, oh my God, like it's been a month, like I'm still not making money, I still don't get it, what's going on? And my thing is, it took me, 3 years without these support that is now existing. It took me that long to be able to make money. But what I tell people is, a doctor has to go to school for 10 years and has to get in debt $250,000 to be a doctor, and then he's going to make $500,000 a year. Are you willing to go to trading school for 1 year or 2 years to make that same $500,000 a year? And when I say it like that, people start to realize, like, oh shit, like this is an actual business. If I treat it as a business, if I invest in my business, which is my education, if I invest in that and I learn how to get better, the more time that I put in, the faster I'm going to get it,
Right. That's well said, bro. Really, really well said.
Let's just jump in. Sorry,
go ahead, please, Steve, please.
I just want to jump in and say, guys, if anyone wants to ask any questions, we've got a lot of people online here. If you want to start firing questions specifically to Alex, ask him anything you want in regards to trading. We're going to read those out at the end. The main other thing that I had is, Alex, do you think discipline is something that can be learned over a period of years, or do you think just some people are more naturally disciplined than others?
Okay, that's a good question. So I think everyone is disciplined in areas of their life that they care about the most. So for example, like for me, I know that every single morning before I do anything, I have to have a cup of coffee. I can't function without coffee, right? So going to that espresso machine every single day, I know that I need that, right? Or for example, like there's other people out there like girls are disciplined enough to check themselves out 100 million times a day, right? They're checking their hair, they're fixing this, they're fixing that. I think discipline comes from you wanting to be able to do something. So for example, like if I want to be disciplined in the trading world, I must be disciplined in certain areas in the real world, right? So if I want to become a better trader, if I want to become more disciplined in the trading world, then I got to start being disciplined in the real world. So for me, what helped me is I really, really hate exercise. I hate it more than anything. I'm just not good at it. I'm not passionate about it. I hate every second of it. But I like walking. Walking outside is my form of exercise. So what helped me be more disciplined in the trading world is instilling that every single morning before the market opens, I got to go on a 20-minute walk just to clear my head, just to do something that's going to kind of get the juices flowing a little bit for me. So if you are struggling with being more disciplined in the trading world, it's probably because you lack certain discipline in the real world, right? So there's certain things that we all do every single day, whether it be, I don't know, just certain things like my brother won't leave the house without like his he has like a lucky keychain, whatever it is. So he won't leave the house without a lucky keychain. So he has the discipline to remember to take that with him every single day. So if you have, or another example is like weightlifters, like to be a very consistently strong person that has muscles. You have to have the discipline to go to the gym whenever it takes, whatever you want. So I don't know, it depends. I think discipline can be learned. It's not easy, but I think if you're passionate about something, the discipline becomes easier. Because I hate exercise, I hate working out, but what made it easier is I found an area in that, which is walking, that helps me become more disciplined. So if you're lacking discipline, I think it can be taught. It's not easy, but if you are passionate, or if you find a certain segment of something that you're passionate in, it'll help that discipline continue.
Okay. So I got
What do
two.
you guys think? Do you guys think discipline could be taught?
I think it's harder to be taught. Obviously, it's a lot easier if you're more of a disciplined person by nature. My wife gets up. I'm not joking, fellas. I don't think she's missed a day of working out in the last 4 years, and I swear I'm not even. I'm being totally honest. Some days two times a day. So can you? And that's not me. I mean, I will work out in the morning most days, but I can tell you, like, when I see her getting up in the morning, it makes it a lot harder for me to stay in bed when I know she's getting up and getting out there. So she helps me with my discipline by being very disciplined, and I feed off of that,
Yeah.
especially with respect to working out. So I think to your point, if you have someone who could support you, whatever that may look like, it does make it a lot easier. If you're going through a similar journey with somebody else, it's easier to be disciplined with having someone at your side that's kind of up against the same thing that you're up against.
Yeah.
I'll jump in and comment, because I'm notoriously famously undisciplined in some of my past and in some of my trades. I had a really good run in 2021. Do you know when the market's really in your favor and you're short on GAPAs and it's really working? When you're winning, it's quite easy to have discipline, but when you're losing, it's extremely hard to have discipline, because you've just took a loss, and then you think, F this, I want to do something stupid. But what changed it for me is two things. A, just shorten safe patterns, like not always shorten the GAPAs, because it can be quite tricky. Shorten the really broken stocks only at key resistance levels, because if it goes through the line, you have to cut it because you're wrong. So this is one way to help discipline, and the other thing was max loss. Even if you're terribly undisciplined, your max loss is your max loss, and you're done for the day, right?
Back pocket, yeah.
So as long as you've got an edge most of the time, it doesn't matter if you lose discipline on a Friday. Like it sucks, but you're not dead. You're not dead in the water. Do you know what I mean?
Yeah.
Yeah, and that's where the broker helps as well, where you could have the technology help you be more disciplined if you are lacking that.
Correct.
Sure.
One last question, because I do want to get to some questions from our folks. Any key differentiators about what you guys do? You've been around the block a few times. I'm sure you went through a bunch of different rooms or influencers, if you will, prior to maybe meeting Bao. What is it that what can you say that you guys do differently than the rest?
So number one is, it's what we like to do is a couple things. Number one is our education is all real time, right? So a lot of these people, they provide videos that are maybe from 2-3 years ago that are a little bit outdated. Strategies are outdated. Whereas what we like to do is we probably have 5 new videos a week that are current market strategies. Another thing is access, right? You have access to me, Bao, and our team of mentors and moderators. When I first started trading and I was in these other rooms, if I messaged the guru, if I messaged the guy, God, I had a better chance of winning the lottery than him replying.
Yeah, right.
So there was that. Also, in addition, is we do not pump stocks. We do not do text message alerts. We don't do email alerts. We don't do voice alerts. We don't do Discord alerts. We don't do any type of alert. What we do is we educate real time. So, for example, I post a watch list about 30 minutes before the market opens, and that watch list is the same stocks, same lines, same strategies that I use to execute on. So it's impossible to pump with it because posted before the market opens. Because we're so confident in the strategy and the setups that if the stock hits a certain level, we know that's probably going to come back down from there. So everything is pretty much pre-planned, right? There's no pumps, there's no alerts, there's no anything. And what we do is we share our charts and our executions real time to the members. So if we're trading a stock and we made money on it, we're going to share that chart with our entries and exits, explain why we traded that chart, and go figure everyone else traded that same exact stock the same way, because that's the strategy that we teach. So the thing that I explain is, if professional hedge fund traders, if these professional $100 million traders are not following chat room alerts, if they're not following text message alerts, if they're not following email alerts, why should you, as a trying to be a professional
Great
trader,
point.
do that as well, right? So I think a lot of people are conned into these get rich quick, make money fast alerts, text message, get in, get out, that they don't realize that that's actually the fastest way to lose money. They come in thinking it's the fastest way to make money, but that's the fastest way to lose money. So we teach our traders professional trading strategies. We teach them technical analysis. We teach them fundamental analysis. We teach them how to decipher news, how to decipher filings, what is a sector play, what is a theme that's moving. And throughout all this, you know, every single Monday I make a video, every single Tuesday Bao makes a video, every single Thursday we have a strategy webinar, every single Tuesday we have a large cap webinar. So while also teaching, we keep it up to date with what's working, because like we said in the beginning of this video, the strategies that worked in 2020 and 2021 that made people millions of dollars are obsolete. So these gurus are teaching people obsolete strategies because 2 years ago it made them millions of dollars. And as a new trader, you don't know that those strategies don't work anymore, you know? So we keep our stuff up to date. You know, you have access to us. We teach you professional stuff and no pumps, no alerts. You know, we wanted to do it the right way because we want to be able to, when we throw these meetups around the world, we don't want to be afraid that some guy bought our pump and lost all of his money and is going to come and shake me, right? I want to be able to help these guys the right way and be able to get a good night's sleep, knowing the FTC is not after me, the SEC is not after me, FINRA's not after me, right? And that people often forget that a lot of these guys that have these pump rooms are investigated by the FTC, are getting sued for millions of dollars. So we'd rather keep everything clean. And by doing that, we have created a service that is professional, you know?
Right. Listen, that's your guys' reputation, and it precedes the both of you. Bao, I know, has been doing it for forever. You maybe a little less so, but I think you guys are both, in terms of, you know, what you represent and how you conduct yourselves, are, you know, kind of the gold standard in the community. So, you know, hey, obviously, thank you for joining us today.
Sure. Let's do some questions.
So, yeah, let's take some questions.
I've got a couple of questions, a couple of good ones. The first one is from Martina. Let me just catch this. Martina says, how did you deal with the fear of losing? Did it ever make you stop trading or quit for a period of time?
Okay, so fear of losing often happens because you lack a plan. You're probably trading something randomly. You don't know what you're doing. You might be gambling. So fear of losing happens if you don't plan properly. So number one is make sure to have a plan. What's your entry? What's your exit? What's your target? What's your stop? If you have that all done, there's no fear because everything is already counted for. You know that if a stock hits a certain level, that's your exit. You know that if a stock hits a certain level, that's your stop. You know that if a stock hits a certain thing, that's your profit target. Without having a plan, entry, exit, stop, target, you're shooting in the dark. So if you eliminate that and you give yourself that plan, there's no more fear. So fear happens from the unknowns, and the unknown is probably from a lack of plan, you know?
Do you guys have a general rule on where you're setting your stops and your exits?
Yeah, so exactly. So the general rule is, obviously it's a little bit more vague, but I'll get more detail, is when the trade thesis is no longer active, that is where you must stop. So for example, if you see a ginormous death candle on a stock and the stock reclaims that death candle, that's your stop, because that thesis is no longer active, that stock is not, that was not actually a death candle, it was a trap, right? So it depends, you know, and the simple thing is people say, oh, if you're a short, you should stop out at high of the day. The problem is if you stop out at high of the day, everyone's stopping out at high of the day. So I like to give myself a little bit of wiggle room above that to stop everyone out and then come back down. So if you're not accounting for that in your size and your plan, then that's something else, you know?
Great point. Great point.
I have a question from Serges. Quite an important, quite a good question as well, quite relevant, because we've talked a lot about short selling, right? But we haven't talked about any long bias trading whatsoever. Sure. So the question is, the strategy Alex mentioned, are these short bias, long bias, or can it be taken both ways?
So mostly short bias, because for me, I have a better job of identifying when the top is set rather than when the bottom is set, because oftentimes these scam penny stocks, after they set the top, there's no more juice for it to kind of keep going up, is what I've kind of observed. But for long bias traders, I mean, there's a couple things we talk about. So there's always a hot stock moving in the morning. We call it the hot stock and the side stock, right? So the hot stock moving, that's, you know, continuously making new highs, new highs, new highs, new highs. That should be the stock that's uptrending. As a long bias trader, you should look to buy that stock that's strong, that's uptrending, right? But as a short bias trader, when the backside is in, when the downtrend is in, you should look to short that. So for me, I'm just not good at long trades. I'm not really a long bias trader. I know my niche is mostly short bias, so I focus on short bias. But if you're a long bias trader, you should look for, you know, hot stocks, you know, holding above VWAP, low float, SSR, easy to borrow. The red flags that make someone avoid a short should be the green flags that make you go long. So for me, those red flags for a short are low float, easy to borrow, SSR, high institutional ownership, and, you know, phase 3 biotech news, right? So if a stock has those catalysts, doesn't mean that I'm going to ignore it short, but I'm going to use a little bit less size. As a long bias trader, the more of those red flags that are attached at the same time, whether it be the stock is easy to borrow, the stock is SSR, and the stock is a low float, all three at the same time, that is your signal to long, and that is my red flag to avoid the short, you know?
Awesome.
Well, I'll take it later. Just one final question, which is an important one, talking about support and resistance. How much weight do you give to the pre-market levels compared to the levels set at like post 9:30 when there's more volume? Which way do you give? How much weight do you give the pre-market levels compared to the intraday levels?
Yeah, so both of them matter, right? Because before the market opens, the pre-market is what kind of builds the chart, right? It identifies where the chart is at. So coming into the open, the data that we have is only from pre-market. So that data should hold strong, but if it just kind of blasts through resistance or shoots down through support, then there's new areas that have been made. But in the meantime, until that overall trend towards 11 or 12 p.m. after it's traded for 3-4 hours has been made, pre-market is the only data that we have, so we must use that data, you know?
Sounds good.
You have any others, Stevie?
No, I think we're good. Just one important thing is for everyone who watched the webinar, it's important to mention that there will be an email coming out with a discount link that gives you pretty decent, very good discounts to the range of different MIC offerings and courses. One of which I'm in as well.
I mean, look, we have a lot of free content on the internet, you know, youtube.com, My Investing Club. But to be honest, guys, in this market when a lot of people are struggling, in this market where most people are blowing up, I mean, I know times are tough, the economy is rough, you know, we're in recession, this, that, but if you're serious about trading and if you really want to learn how to be a professional trader, you know, now is the time to learn so that when the markets do turn, when the cycle does change, you will be prepared rather than trying to learn in that hot cycle. By the time that hot cycle comes, if you don't already know what you're doing, it's going to be very hard to capitalize. So while it's slow, while we're kind of in a down cycle, use this time to learn, invest in your education, and, you know, see what happens.
Great. Fellas, this was really awesome. I felt like a student for a lot of it, Alex. I really appreciate it. Seriously, it was
This is
great.
great, guys.
You know, it was awesome, eh? Because you break it down in bite-sized pieces that's easy to understand. It's not theory and, you know, fluff. It's actionable items that you actually do, and I think that's awesome. So I appreciate
it. We trade every day, man. We trade every single day. There's the only day that we miss is probably if we're sick, and even then we're still trading, right? Because this is something we're passionate about, right? I love trading. It's as much of an addiction as it is a passion.
And we love supporting you guys. We really do.
It's great. It's great. And I mean, just shout out to TradeZero. I mean, I would love to be back on here with you guys again whenever you guys want. This is awesome. But again, if there's one takeaway, guys, if there's one takeaway that you have to focus on in this webinar, it's set your risk parameters, because those risk parameters will save you in the long run. I'm telling you, They will save you. Do not blow up your account before you finally listen. Just set the max loss, set the max size, max loss, no more than 2 days worth of work. No more. Don't make it a week, don't make it a month, because traders lack confidence. After a losing day, you lose your confidence. The quicker you make it back, the faster you get your confidence. So make sure it's not a life-altering loss. Make sure it's just a drop in the bucket. That's the best thing that's going to help you.
Great point and great advice. Gentlemen, Alex Temiz, My Investing Club, Steven Johnson, Dan Pipitone here. Thank you all for your time. We appreciate it. Have a great rest of your day.
Thanks,
Be well,
guys.
fellas. Thank you.
Thanks, guys.
Later. Bye-bye.